Welcome back. Let's cut across to the tech. Mahindra management on the numbers.
PAT for the quarter was at rupees 377 crores, up 25% year-on-year and 37% quarter-on-quarter. For the full year, the consolidated revenues were around 6,870 crores, up 25% year-on-year. The EBITDA for the year was 1,424 crores, up 55% year-on-year. EBITDA margins at 20.7%, an improvement of 400 basis points. The consolidated PAT for the year was at rupees 1288 crores, up 18%. As we look back, I believe we delivered 9.2% growth in dollar terms, in large measure helped by our strategic acquisitions, which I'm delighted to inform you are doing very well. Our momentum in our non-BT business continued with 21% growth in FY13. On organic basis, non-BT grew 13% in quarter 4 on a year-on-year basis, and this is in line with our strategy for broad-based revenues. So, net-net, we are looking at smart growth both on the overall revenue and on EBITDA front. And on EBITDA front, we have managed to increase our EBITDA margin substantially during the year, have crossed the threshold of 20%, and EBITDA margins after a gap of almost 3 years. Our recognition as a partner of choice in managed services to telcos globally has resulted in some significant wins, and our large deal pipeline remains healthy. Our acquisitions, as I said earlier, have worked well and have been delivering as per our expectations, though they are at early stages. We have to look at our growth in the context of what is happening globally. US, I think, is on the path of recovery. The demand is growing. We are seeing also some expansion in discretionary spend. But as we all know, US is a very competitive market. We have done well in Asia, Middle East, and Africa. But what has been remarkable this year in these regions has been a smart uptick in our profitability there. This was achieved through series of measures and our greater familiarity with how these economies function. So there has been, I think, a qualitative improvement in the way we operate in these areas. Europe continues to have issues, as we all know. But you see a greater sense of stability, or perhaps acquiescence, that the growth in Europe is going to be low and patchy, and crises will emerge from time to time, but they have now become a part of their daily existence. If it's not Greece, it's Cyprus. If it's not Cyprus, it could be some other country. Now, that has had, I think, a positive impact for us, because Europe recognizes that it has to be competitive. So some of the barriers which were there earlier are coming down, and that is why, paradoxically, we have perhaps the healthiest pipeline in Europe. The technology is changing. The telcos are facing huge constraints on networks because of the almost insatiable demand for data. That again is positive. But the most positive thing is, insofar as Techem is concerned, and we are proud of it, is that we are now an unquestioned leader in the telecom industry in India.
The management of Tech Mahindra illustrating all of the factors that led to the strong growth this time around. The large deal pipeline remains healthy. The demand in the US market is also auguring well for them, and strategic acquisitions is what has also contributed to the growth. In terms of the dollar revenue, as the management pointed out, it's been up by 9.2% this time around. And as far as future guidance is concerned, they say that they do see an expansion in the discretionary spending in the US. Well, moving on from that, on the third day of the Chinese Premier League